Hey everyone, Couch Investor here with another video for you today. Today is going to be actually my last video for the hotel series. We're going to talk about Marriott. We already talked about Hyatt in my last video, Hilton and Park Hotel and Resorts. If you haven't checked that out, I think the link will be here or here. And for the people that have watched my casino stock videos, we talked about Sands, Wynn and MGM. Since then, the stock has been on the rise, I think 10 to 15%. So if my video helped you or convinced you to enter or open a position in those stocks, congratulations. If you want to know my opinion on what you should do right now, is maybe wait a little bit for the market to cool down, because it's been going up a bit too much too fast. And again, thank you everyone that has been subscribing. We are at 135 subscribers. If we can reach that 200 mark by the end of the month, not this one, but month of May, that would be awesome. And if you like my videos, give it a thumbs up. So without further ado, let's get started with Marriott stock. So as of today, again, green day in the markets. The S&P 500 is up 0.55%. The Dow was up 300 points, so it has gone down a little bit. And Marriott stock is up 2.16% to $87. Now year to date, as you can see, as most hotel stocks, it went down by a lot. We should, at its lowest point, it was almost what 60 something percent discount. Since then it has gone up quite nicely, 40% I think or so. We'll go over the balance sheet real quick. Now ticker symbol MAR, price as we saw 87.62. Well, it's changing quite a bit. PE ratio is a bit like the whole industry, 20 in the 20s, 22.44. Dividend yield of 48 cents per quarter per share. 5-year average PE of 28, so you're buying it cheaper than its average, which is always nice. It beat its last earnings, and all-time highs were $150, so still cheap in price, you can say. Now let's go over the rest of the balance sheet. $225 million in cash, not a lot at all. Revenue of 20.9 billion, cost of revenue 17.5, which leaves them in gross profit of $3.2 billion. Total operating expenses 1.8 billion, operating income of 1.9. Again, cash, same thing as here. Receivables 2.39 billion, no inventory, no prepaid expenses that I could find with reasonable numbers, which brings us at a total of 3.12 billion cash and assets. Non-cash assets, property, $4 billion, depreciation of 1.3. That shouldn't be this. It should have been, I think, 11 billion, which leaves us at a net of 9.8. Intangible assets, 8.6 billion. Other, $595 million, which brings us at a total of 21.92. Now it's a total of almost $25 billion in assets. Liabilities a bit less, but still not good enough for a good investment. You want to have a ratio of 2 to 1 of assets to liabilities, that is. So short term 6.67 billion, long term 17.67 billion. The breakdown of the short term liabilities. So current debt, short term 977 million, accounts payable of $720 million, accrued liability 2.72 billion, then all the others 2.25, which brings us at a total of $6.66 billion in short term liability, which is a lot, but that's not the biggest problem here. Gross margins and operating margin are very low, 15.3% and 9.2%. Usually I would say, okay, it's fine, but in the current conditions, you would have liked it to be higher. So in case like today, if a company has an operating margin of 20%, it can maybe lower that and survive a bit longer. Here, if they will go lower, they will have a hard time surviving this current situation. Comes the bad part now. Stock repurchasing. They repurchased $2.26 billion in stock, which is a lot, seeing that they only have $225 million in cash. Imagine they didn't repurchase back their stockpile will be higher, their assets would be higher, and the balance sheet as an overall would be better. Last year's earning per share $3.8. This year's estimate is at 2.8, but might be a bit lower. It will always change looking at the period of, well, the quarantine and well, the whole virus situation. If it goes past the summer, might be a lot lower than that. It has 324 million shares outstanding. Dividend payment, as we said, 48 cents per share. Current valuation 28.36. Last year's earning was $1.27 billion, which brings us at a valuation versus previous earnings. Total return on investment of 22 years and a third, let's say. Should be almost the same as the PE, right? Okay, correct. Current reflections of earnings is 981. So not a big difference. It's almost 300 million difference in the earnings. So if you think it's a valuable stock to buy right now, and you think in the future they'll go back to their previous earnings, then yes, might be a good deal. In my opinion, there are better deals out there like Hilton and Hyatt that we covered, and Park Hotel and Resorts, but that's more like a real estate investment trust. And here I put it in dark red. Stockholders' equity has gone down drastically and dramatically in the last couple of years. So that's why for me, I will pass on this stock. I just wanted to cover the big hotel stocks so that people that are interested in it will have a clear overview of the big ones. Let's look at a couple of articles very quick. This was at the beginning of April. Why the stock lost 40%. As you can see, the market tanked 12% and a half at the beginning. Hotel stock like Marriott tanked 40%. Big difference there. Something that I wanted to show right here. Marriott is among the companies most exposed to the catastrophe, and in a March 18th update, CEO Arne Sorensen said, as the virus and efforts to contain it have spread around the world, demand at our hotel has dropped significantly. Occupancy level in North America and Europe have fallen to below 25%, compared with around 70% a year ago. Obviously, the longer the situation lasts, the more money they will burn, the more cash they will lose, and we saw they do not have a lot of cash. Yes, they have assets, but I think they would like it if they don't have to sell any assets. Maybe they will cut dividend. A lot of companies have done that. FYI, I covered Carnival stock. They have cut dividend so that they will have more cash. So in my last video, I covered Carnival, Norwegian Cruise Line, and Royal Caribbean. So as of now, Carnival has no dividend until further notice. I hold Carnival, but am I sad or disappointed that it doesn't have any dividends anymore? Yes, I wouldn't lie, because it was a very, very high dividend. But still, in the short term, I would be more than happy to leave the dividend aside, so that it will help the company recover, and in the long term they will probably put the dividend back in, stop with the share buybacks that will free up even more cash, and that would make the way to move forward much easier. Now another that was a week ago, again stock was down 5%, but it already went up a bit. Same thing here, but now more specifically, approximately 25% of Marriott's 7,300 hotels are temporarily closed, and the hotelier expects it will have to close even more. Now this was a week ago. I think probably it went up to almost 30% by now. It says performance is going to degrade further and expects to report that revenue per available room, an important industry metric, will fall to 60% worldwide for March. Now, it wouldn't even surprise me if it's more than 60%, because nowadays who in their right mind will want to go to a hotel and actually on vacation. I'm not even going on a plane, so hotel, I'm not going there either. Probably not going to a hotel until the end of the year. That's my personal opinion, but we'll see what happens. Now, lastly, stock sinks as market gains, but that was again 3 days ago. Since then, the stock has also gone up like the market. Again, talks about the numbers and the longevity of the whole crisis and etc. Now, if you want to know, Zacks rank system, it's a proven system that tracks most of the stocks. They have like number 1 is a strong buy, number 5 is a strong sell. As of now, Marriott ranks number 5 as a strong sell. Obviously, a lot of hotel stocks will be a strong sell right now, because if you want to pick a stock right now, those will be the last one you should pick. But if you want to take a risk and have high rewards in the future, that might work to pick those stocks right now. Same with casino stocks, airlines, cruise lines, etc. But that's what I wanted to show. For me personally, it's not really a stock that I would like to buy right now, especially not at these prices anymore. Yes, at $60 I would buy, because, well, it's extremely cheap at $60, as you can see here. And as you can see, the volume right here has not been great at all for the price to go up that fast and that strong. Here we can see high volume, that's why you see a lot of selling, a little bit of buying again. But since then, here a little peak, but not enough to give us a 40% upside since its lowest point. Might be the stimulus effect, might be some institutions buying up some ETFs or whatever, but for me, I can see the stock and the market as a whole go back a little bit, because as of now, the money is going blindly into stocks with high hopes of everything going back to normal ASAP. So for me, it's a pass. I'm not going to buy Marriott stock. As of now, I have some cash on the side in case some other stocks will go lower. One of those stocks will be Tesla, of course. Some of you might know I bought Tesla at $180, sold at $903, and now I'm looking to buy back maybe around $600, $700. Obviously, it has gone up dramatically in the last couple of days, like it did the last couple of months. But I have patience, because I think the market, especially this week, most big companies are reporting earnings, and I'm especially looking forward to see their future guidance and what their expectations are for this year and next year. So that would be all. If you liked the videos, please leave it a thumbs up, and if you haven't subscribed, push that subscribe button, and see you all in the next video. It's going to be interesting content coming up. I have a couple of topics prepared. I'm going to go over some interesting portfolios from famous people. So please subscribe and stay tuned. Take care. See you in the next video. Bye bye.